Okie dokie. I am really sorry about the Zoom mess. Please do let me know if you check out the MP4 file and if that works or not. If it works, then great. If it doesn't, please let me know so I can report it. And I hope this YouTube video helps. So if we take a look at the assignment, we have done the previous things all right. The initial investment is 5,000. Oops. And sorry, I can't send you the spreadsheet even if I want to because of the TA rules that we have to follow. So the cash is 5,000. And if you remember that from the practice, when we increase cash, the paid-in capital also increase. That takes care of the initial investment. And we did accounts receivable, inventory, equipment, and accumulated depreciation. Accounts payable, notes payable, right? So I'm just going to go through this real quick. For the accounts receivable, we are going to use the current month's sales, which is 2,200. We use that number because accounts receivable is we are trying to estimate how much of these sales are uncredited. That means we're not receiving cash right now this month. Thus, it becomes this month's accounts receivable. We divide that by 30 days times the 5 days of receivables we need. Got this number. As for the inventory, if you plan to have 33 days inventory, please pay special notice to this one. We are using next month's cost of goods sold instead of this month's to figure out how much we have to have inventory on hand. And this is because we need to pre-plan for how much inventory we have on hand in order to prepare for our next month's sale, the cost of goods sold. That's why we use the February number divided by 30 days times days inventory. As for the equipment, we purchased $500 worth of equipment, so that's 500. And the accumulated depreciation, for now, I'll just say put this formula in there. There we go. And now when we go to account payable, it's based on this month's expenses. So this month's expenses, total expense, divided by 30 days time payable. We got this amount. Our note payable here is 0. Okay, we're still kind of off. And the reason that we're off is, I'm so sorry, I messed it up during our appointment earlier. We are supposed to fix it from the retained earnings. And it says you know what to do with these cells, and refer to the practice assignments instructions. So what we're really gonna do in this case is we are gonna use this month's net income, in this case net loss, and add it to our previous month's retained earnings. Because this is the first month of the business, the retained earnings from previous month is a 0. And it gives us 1414. The difference is this amount. And if we use $5,000 subtracting 3510.26 and ding, 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 1489.74, that's this amount. So I hope this all makes sense. And if we're doing the numbers in February for accounts receivable, we drag the formula. Inventory stays same, drag the formula. Equipment still $500. We drag the formula, drag it. Hidden capital stays the same. Retained earnings. Now we have the formula in place, and the difference is 410.43. And a balance. Voila, 410.43. What we really missed was that retained earnings things. And we are supposed to use our previous month's number, adding the net income or net loss for this month. And yep, here it is. If you have any questions, please feel free to make an appointment, shoot me an email, whatever that works for you. And I hope this helps. Come on, how do I end this?